This week in the Parish of Bourses and market structure, Bloomberg, the world's biggest terminal, has a near-terminal failure, stopping Eurobond markets amongst others. As the SEC likes private markets for all, does the death of the penny mean new tick sizes? My name is Patrick L. Young. Welcome to the Bourse Business Weekly Digest. It's the Exchange Invest Weekly Podcast, episode 297. Good day, ladies and gentlemen. This is a very brief reduction of highlights amongst the key headlines from the week in market structure. All the analysis of the many events and happenings from the past 7 days can be found in Exchange Invest Daily Subscriber Newsletter, the unique guide to the Bourse business sent daily to your inbox. More details at exchangeinvest.com. Over in BitCarnage, the Bloomberg headline, "Crypto crime is the future, bank heists are history," serves as an apt reminder that nowadays it's tough enough finding a bank branch, let alone which one might actually have enough cash to make it worthwhile going all oceans umpteen. Not far removed from bank robbery is, of course, pure play larceny, as Yahoo Finance notes, Coinbase hack reveals crypto vulnerability to old school crime, bribery. That too is a big thing in contemporary crypto crime, it seems. If you enjoyed this excerpt, you may be interested to know you can read BitCarnage every day in Exchange Invest. Alternatively, if you want to follow BitCarnage, the daily update on happenings in the world of crypto and digital assets, you can find BitCarnage as a standalone on Substack. This week in exchanges, Spain moves towards more flexible, simpler listings for BME in a welcome development, as the LSE is talking up its private markets platform, Pisces. News that the US Treasury sounds death knell for penny production, as the WSJ headline put it, means physical goods producers will have to round prices up or down. Does that mean we have to change the US stock tick size once again? Brendan Caldwell, son of Tom, made a powerful case for public markets this week in the Canadian Financial Post, well championed in the same week when Urbana's investment in CSE looks better than ever with the acquisition of the Australian NSX. Over in results, not much to look at this week. One rather sad set of news. The Moscow Exchange announced results for Q1 2025 with operating income down 16%, net profits down 33%. Bit of a profit slump all round as the Ukraine war wages on. Exchange Invest is proud to have launched a special edition inspired by my visit to ring the closing bell at the New York Stock Exchange on July the 5th, 2024. Patrick L. Young, that's me's original bestseller, Capital Market Revolution, the first breakthrough book in fintech, a decade before that word held common currency, has over 10,000 new words of additional pith, placing the past quarter century in perspective alongside the original text, which has proven remarkably successful throughout the years. Capital Market Revolution 25th Anniversary Edition is published by Exchange Invest and is now available as an ebook via Amazon Kindle at a ludicrously reasonable price of $9.99, a quarter the price of the original shorter print book a quarter century ago. Meanwhile, if you fancy some financial insights with moving pictures and not just voice, check out our live stream Tuesdays 5 o'clock London, 12 o'clock New York time. It's the IPO video live show. Catch the back episodes on LinkedIn and YouTube via IPO-VID. In product news, Shanghai Futures Exchange is going to be launching LNG and paper futures, according to their chief, while the LSEG has dropped a plan to add SIBO data to the WMR FX benchmarks. I imagine SIBO will be aggrieved at being deemed insufficiently equivalent by Forex users.
Thanks for listening to Exchange Invest Weekly. We welcome your feedback. You can contact me directly, patrick@derivativesvision.com, with any comments. Meanwhile, if you enjoyed this show, we would welcome you giving us a thumbs up. Or if you have time, a positive review will always be welcome, wherever you find this podcast.
Technology news this week. Well, we were ablaze with technology news. First of all, Manila's Philippine Stock Exchange opts for its fourth change in system from its initiation 30 years ago. That marks an upgrade of Xstream under Nasdaq, the earlier systems having been an NYSE Tech and the MacTrade system created locally from Makati Stock Exchange, which was merged along with Manila Stock Exchange into the PSE in 1992 in a deal personally architected by then President Fidel Ramos. Mentioned at the top of the show, Bloomberg terminal outage hits traders, as the Financial Times noted. What an unfortunate shambles, putting the usually super smug left-wing provider of bond market data in a right pickle. Bloomberg had the sort of stuff up last week, which if this were an exchange we would never hear the end of from the likes of Bloomberg. Perhaps it's time to consider whether Bloomies is breaching antitrust positions, if it has such a firm hold that the bond markets can't price if it goes down. Certainly there ought to be a lot of concerns after this 90-minute delay given the premium pricing of the platform. A day when the black box Bloomberg terminal surely ought to be benchmarked to the reality of the open source digital dynamism of today. When even the Financial Times can pillory your inefficiency, it's fair to say you're having a very, very bad day indeed. Moreover, it wasn't an isolated volley. There was a slightly silly story on the Bugle the other day where a decimal point failure led to a relatively obscure clothier being the world's largest company by market cap, if you were relying on Bloomberg data. So is this the point where we decry peak Bloomberg? I very much think so, albeit I doubt that means a Reuters renaissance under LSEG. Bloomberg was not alone in having technical problems last week. The CFTC themselves, they resolved technical issues after some time with their comment portal. And clearly the CFTC will have to sanction themselves for this technical problem, which robbed us temporarily of our First Amendment rights. In regulation, the new SEC chairman, Paul Atkins, is signalling investor access to private markets could soon broaden. That's a major development for, well, whatever it is private markets are trying to become. That said, it's really worth revisiting his testimony from last week. Paul Atkins' testimony before the United States House Appropriations Subcommittee on Financial Services and General Government, as the core Atkins pronouncements are superb, aka remove the Gensler bracket creep madness and adopt a superglue knitting stick to the fundamentals of markets. Also, we love the comments on closing the Office of Innovation blah blah and putting lipstick on analog blobsters, or whatever it was called, as digital needs to run through the whole organisation. A joyous proclamation, if perhaps impossible in the broader line of government at least. Busy week in career paths. Former LSEG staffer Dean Barry's jumping ship to join Market Access as Group COO and CEO of EMEA and APAC, while the CFTC is in danger of having no commissioners whatsoever, as Kristen Johnson announced her imminent departure, leaving two commissioners, Mercinger and Pham, both of whom are only staying until at least a new chairman is appointed, albeit there are no scheduled hearings at present for Brian Quintons to be approved, so far as we are aware. That leaves us with a fascinating story in the South China Morning Post a few weeks back, which continues to intrigue me. The headline was, Big Impact, Russian Goods Seizures Cause Havoc on China-Europe Rail Link. In essence, that magnificent Belt and Road network created by China has had some issues of late. Some folks in Europe have been ordering stuff off Alibaba, Shine or wherever, and the parcel gets popped on the train by that nice Mrs. Wong or somebody in, say, downtown Hangzhou. The problem is the parcel can move seamlessly across the rail network, but then hits a problem when it reaches customs at the Russian border. Thus, the freight land route China-Europe is de facto closed for business. For passenger traffic, the spectacle of seeing uniformed Russian railway staff saluting as their train headed from Warsaw Central to Moscow has now been replaced with a service which only goes to Minsk after Russian trains were cut off from Europe post-Ukraine invasion. And on that mysterious and magnificent note, thank you for listening to this EI Weekly Podcast 297. Join us daily via exchangeinvest.com, or if you have a new exchange you would like built, get in touch. My name is Patrick L. Young, and I wish you a great week in life and markets.
This show relates to the business of bourses. It is not to be construed as investment advice, nor are we making any investment recommendations. Please consult an investment advisor before you make any investments, and for goodness sake, do your due diligence and do not make investments without complying with the regulations in your home state. Exchange Invest cannot be held responsible for any investment decisions made as a result of our program, which is for entertainment purposes only. The material herein is copyright Patrick L. Young at the date of publication, while our music and sound effects are sourced from copyright-free sources. Thanks for listening to Exchange Invest Weekly, the exchange of information.